There are those who feel that they can stomach a lot higher risk and may get into investments on the stock exchange of companies that are significantly more volatile, or industries that are significantly more volatile. So for instance, and to give an example of that, if you're investing in stocks in the agricultural sector, the risk is significantly higher dependent on what the weather is like in a particular year. We are just coming from a period of intensive drought, so that has had a big effect on agricultural output of some of the companies like the likes of Kakuzi and Williamson Tea and Sasini. So again, that risk could be a bit high. It could also be high in the positive from the point of view of the fact that these are companies that export majority of their produce. So if they do that, when the shilling has weakened and the dollar has strengthened, they are earning more shillings for each unit of dollar that they are receiving for their produce. So again, you can see a situation of where these are companies that have that are for those with a higher risk tolerance. And the flip side is that there are also those companies that you can invest in that are more mature, that deal in products where the risk or the change in variables to the company are not so intense on a year-on-year basis. If you're buying into the likes of BAT, those are fairly mature companies whose variations on a year-on-year basis in terms of their inputs, in terms of their markets, are significantly lower. Right? So based on your risk tolerance, you are then able to assess the companies listed on the stock exchange. You're able to assess fundamentals. You're able to understand the variables that determine the profitability of those companies, and you're able to make a decision on that.